We think what's going to shock people in the years ahead is that the technologies that really the seeds for all of them were planted in the 20 years that ended in the tech and telecom bubble. So those were the seeds. They've been germinating ever since. And now they're ready to blossom. They're ready for prime time. And it's not just one or two seeds, which has been the history of innovation, like the transistor and the internet and so forth. It's five major platforms involving 14 different technologies. So, multi-omic sequencing in the life science space, robotics, energy storage, artificial intelligence, and blockchain technology. So each of them is evolving, ready for prime time, ready to scale at growth rates that, depending on the technology, are anywhere from 20% to 50% per year. AI is a big catalyst here, and that's how we get to convergence. Each of these technologies leads to exponential growth, so sustained growth at a very strong.
Cathie Wood, a renowned investor and founder of ARK Invest, is famous for her disruptive innovation investment choices. Through her flagship exchange, traded fund ARK, she invests in revolutionary technologies with the potential to reshape the world. These bold choices, if successful, can provide exponential returns for investors. Today, we've created a WhatsApp investment group where we share 3 high-potential stocks recommended by Cathie Wood daily. One of our members who started buying Cathie Wood's recommended stocks 2 months ago has seen an overall increase of over 160%. If you'd like to receive Cathie Wood's stock picks every day, click the link in the video description to add our investment advisor on WhatsApp. You'll get a 45-day free trial and after that, a 100K gift package. You only need a stock account and to follow our instructions to potentially double your assets by the end of the year. Today, we'll share 3 disruptive stocks from Cathie Wood's portfolio, outlining the breakthrough technologies these companies represent and their potential returns for those ready to embrace the future.
First on the list is none other than the UiPath Inc., ticker symbol PATH. As the second largest position in ARK's vast portfolio with over 40 million shares valued at a staggering $1 billion, UiPath is not just a stock, it's a powerhouse, representing around 7% of ARK's total holdings. And Cathie Wood, the visionary at the helm of ARK Investment Management, believes UiPath is the next big play in the AI arena. The UiPath journey has been nothing short of a rocket ride, with shares soaring 100% year-to-date, and an astounding more than 30% surge since I recommended it to my private Discord members, finding it as one of the market's most underappreciated AI stocks a few months ago. But what sets UiPath apart? Imagine a world where automation not only complements human effort, but propels it forward. UiPath's robotic process automation, or RPA technology, does just that, allowing individuals to build, deploy, and manage software robots that mimic an infinite array of human actions, from software testing to fraud detection. In the recent fiscal quarter, UiPath shattered expectations, delivering a remarkable 24% year-over-year growth in annual recurring revenue, or ARR, surpassing guidance. The company's positive cash flow and net cash balance sheet empowered it to execute a strategic share repurchase program, solidifying its financial prowess. Looking ahead, UiPath's trajectory is nothing short of breathtaking. Management's guidance promises a 20% year-over-year ARR growth in the fourth quarter, reaching $1.455 billion, and a nearly doubling of non-GAAP operating income to $78 million. Their strategic focus on organizations with a long-term commitment to enterprise automation has not only elevated their profile in the C-suite, but has also fueled a surge in remaining performance obligations and current RPO. Next on the list is the unsung hero with a powerful growth trajectory that's poised to outshine its peers. Alphabet Inc., ticker symbol GOOGL. In a year when big tech stocks have soared around 100%, Google stands out as a beacon of financial stability and growth. Dismissing overhyped fears from venture capitalists about the threat of ChatGPT and AI, Google invested heavily in AI over the last decade, proving the skeptics wrong. Astonishingly, Google's stock is not just cheap, but boasts a powerful growth trajectory, in stark contrast to its more expensive and less promising peers. Amidst the chaos, Google emerges as a steady force. With a P/E ratio of 19.9x, Google trades at a fraction of the multiples of peers like Apple, Tesla, and Amazon. The financials tell a compelling story. Google's operating income has increased every year for a decade, showcasing the company's resilience and consistency. Comparing Google to its drama-filled counterparts, the calmness in the comment sections of Google articles is a testament to its financial strength and lack of unnecessary theatrics. While other CEOs engage in MMA-level challenges, Google's understated approach focuses on delivering results. In the midst of this, Google's ad business, particularly on YouTube, is thriving, and the company's dominance in targeted advertising is set to continue. And the final pick for today is none other than Palantir Technologies, Inc., ticker symbol PLTR. Cathie Wood's ARK Invest has been on a substantial buying spree with Palantir Technologies, making 9 trades over the last 2 months and adding a significant chunk of shares to bring Palantir into the 10th largest position in its portfolio, valued at around $265 million. This strategic accumulation underscores a bullish outlook on Palantir's ability to revolutionize industries with its Advanced Information Processing, or AIP, platform. Palantir's AIP, a core driver of its valuation and a pivotal technology in data integration and analytics, showcases a staggering 131% growth in U.S. commercial total contract value, or TCV, for Q1 of 2024. This metric is critical as it reflects not only the current contracts, but also the projected lifetime value of these agreements, highlighting sustained confidence and expansion in Palantir's client relationships. This is a company scaling its capabilities and customer base aggressively, and Cathie Wood's recent trades signal a strong belief in Palantir's trajectory. Despite a slower growth in U.S. commercial revenue, which grew 40% year over year compared to 70% in the previous quarter, Palantir's strategic focus on AIP suggests a longer-term vision that's set to redefine how businesses leverage large-scale data analytics. This dip in revenue growth is a common narrative in the tech sector, especially for companies like Palantir that are invested in setting up complex, multi-year contracts, which are slow to reflect in immediate revenue, but indicate substantial future gains. Moreover, Palantir's recent partnerships, like the one with Oracle, and innovations such as the mixed reality OSDK are set to further embed its technology into the fabric of enterprise operations globally. These collaborations are not just expansions, but multiplicative in their potential to accelerate Palantir's market penetration and influence. Investor sentiments might have been mixed post-Q1 earnings, but the underlying metrics tell a story of a company that's not only retaining customers, but also expanding its reach and depth within existing contracts. With a net dollar retention rate consistently over 100%, Palantir is clearly demonstrating that it's an integral part of its clients' operational frameworks, increasingly so.